Good evening, everyone. Adam here from Bolt Logic. Going to run through another market analysis for you. Let's take a quick look at some of these index charts. We're going to start with the S&P 500, which had an interesting day today. I say that. Let's pull up the 5-minute chart. Let's zoom into today, and as we see, we had a nice washout this morning when we had bad ISM numbers come out. The washout sustained in the morning, was able to hold, started to build a nice base around here, nice bottom here, and before it actually finally broke out towards the end of the day, that breakout ran us into the green where we leveled out a little bit and then sold off a little bit into the close, which is understandable after having a big run up like we did. Going back to the daily, we can see we're still holding in our range, still holding under that 20-day moving average, but more importantly, we're still holding the support here at that 1396 level. That's going to be the area that we need to watch going forward. We definitely had a buy the dip mentality here in the markets. As everybody was buying the washout, it seemed to be a good play. So that is definitely a bullish sign going forward. Taking a look at the Russell, we pointed out yesterday that the Russell was the strongest of the indexes. As you can see, it is broken out today with an over a 1.24% gain. And it does look like it might make another run back to these highs, or at least back to that 830 level. Definitely keep that on watch as it's sitting there holding the 20-day moving average and also has the 50-day and the 200-day rising up as support. So the Russell is always good to watch breakouts. It's definitely another bullish sign just because it means that risk is back on the markets. People are throwing money towards these small caps, which is always a good sign if you're a bull. So definitely keep that in mind going forward. The NASDAQ, again, we pointed out another strong stock as it was consolidating in this tight range. Definitely look for it to continue its run and break out to new highs. Taking a look at some of the sectors, technology was able to hold the 20-day moving average. It's got a nice flag pattern coming down. Definitely see if it can break out of this flag pattern. Always good when technology runs. Also, we're seeing financials here, putting in a nice consolidation, sitting on top of that 20-day moving average. Let's see if it can take out those levels, that 1530, 1520 level, and see if it can't run a little bit more. Again, another bullish sign. Taking a look at the VIX, we saw some premium in the VIX. Some of it came from over the weekend. We did have a long weekend, so over 1% or about 1% of this is just from the weekend effect being added back in. Remember, they take out volatility over the weekend, and then they're going to put it back in when the week starts. So a lot of that is from the weekend effect. And like we said yesterday, we believe that volatility will still hold as we move into Friday's big job numbers and employment numbers. But back with the S&P, we're still holding bullish here. Definitely as we keep this uptrend, we're definitely going to remain bullish, but just due to the fact that the bears would have to make up some serious ground and it seems to be slipping away from them, that we're going to remain bullish here on our stocks and in our view. Hopefully this helps everyone get a good view for tomorrow. Make sure you check out our watch list. We have a bunch of stocks out there, a lot of good ones that are looking to set up and make some nice runs. Good night, everyone.